Money doesn't disappear because you spend it. It disappears because it stops growing while everything around it gets more expensive. And that silent force eating away at your savings has a name: inflation. Most people think they're safe because their money is sitting in a bank account. The balance looks stable. The number doesn't move. But here's the uncomfortable truth. Every single year, that money buys less than it did before. A cup of coffee becomes expensive. Rent creeps up. Groceries feel heavier on the wallet. And without noticing, financial progress starts moving backwards. But there is one type of asset that consistently moves in the opposite direction. Quietly, steadily, and powerfully. It doesn't make loud promises. It doesn't feel exciting in the moment. But over time, it has outpaced inflation for decades. That asset is broad market ownership, especially through diversified stock index investing. Not single risky bets, not chasing trends, but owning small pieces of the world's biggest companies. Companies that grow, adapt, and raise prices along with inflation. Here's why it works. When inflation rises, companies don't just sit still, they adjust. Prices go up, revenue increases, profits grow over time. And as profits grow, the value of those companies tends to rise too. So while cash quietly loses power, productive assets tend to expand with the economy. Think of it like this. Cash is standing still in a moving river. But a diversified stock portfolio is a boat moving with the current. Now here's where most people get it wrong. They try to beat inflation by saving harder, cutting expenses, holding more cash, waiting for the perfect time to invest. But inflation doesn't wait. Even at a modest rate, it slowly compounds against you every single year. That means delaying action has a cost that most people never calculate. The real advantage isn't timing the market. It's time inside the market. Decades of data show a simple pattern. Broad stock markets have historically returned more than inflation over long periods. Not every year, not smoothly, but over time, the trend is upward. And that's where wealth is actually built. Not in sudden jumps, but in long, consistent growth that outpaces the rising cost of living. There's another layer most people miss: reinvestment. When dividends are reinvested, your assets don't just grow, they start compounding on themselves. Small returns begin generating their own returns. And over years, that effect becomes powerful enough to separate financial stability from financial stress. But none of this works without patience. Because in the short term, markets move unpredictably. Prices fall. Headlines create fear. People panic and exit too early. The ones who stay disciplined are the ones who quietly win. Not because they predicted the future, but because they stayed aligned with how wealth actually grows. Inflation isn't going away. It's part of the system. The question is whether your money is fighting it or losing to it. Cash preserves convenience. Assets like diversified equities preserve purchasing power. And over time, that difference decides who stays ahead and who slowly falls behind without realizing it.